All right, welcome everyone to November Capital Factory Immersion Day. My name is Rebecca Zinsmeyer. I'm the Community Programs Coordinator at Capital Factory, and I'm going to be your host for today. For those of you that don't know what Capital Factory Immersion is, it's a half day of programming meant to help our newest members at Capital Factory integrate into our community. So today we are going to be hearing from a successful founder during Founder Stories. And then afterwards, we are going to hop into our founders pitch presentation and hear from the newest accelerator companies in our accelerator. And then lastly, we are going to end with what I like to call an early happy hour or a Sococo social, where we'll get to know everybody and all of the newest members. But I'm not going to take up too much time, so we do have time for our founder stories in just a moment. But to kick us off with some opening remarks, I'm going to bring up Josh Buhrdorf, and the CEO and founder of Capital Factory. So Josh, take it away.
Howdy, everybody. My name is Josh Buhrdorf, and I'm the founder and CEO of Capital Factory, and I'm super excited to welcome you to Immersion Day. Immersion Day is the one day of the month where we welcome all of our new members and mentors and investors and community partners and mentors, everyone into the community and plug them in. And really, when you're joining Capital Factory, it's usually because you want to meet other people. That's why you're here. And so that's what we want to know. As you introduce yourself, we want to know, who else do you want to meet so we can introduce you. And today you're going to see that in the chat, in the shout outs. We're going to be shouting out names of other people that you should meet and you should connect with. That's what we want you to get out of this. Now, Capital Factory, it's a community and it's a place. It's something that happens physically in person when we're allowed to, and that's an important part of it. But of course, since COVID hit, we've been going totally virtually, and I've been amazed how our community has been able to respond to that, and we are going full speed. And so our accelerator is running full speed, our mentor network's running full speed, our investor relations is running full speed. We've got a super active Slack channel, which you should all be sure to join. Go in there, go to the water cooler, post a message introducing yourself, or even post a video like this, and tell us who you want to meet so that we can all make introductions for you. Every morning in the Slack channel, we have an Ask Me Anything session with a different mentor or an investor. Your questions, seeing the questions other people are asking, go into Union, fill out your profile, make sure that it's really clear so people can find you, and then go look for mentors and other people that you want to go connect with. And then look for the other great events coming up. We've got a bunch more coming up before the end of the year. Next week is our Veterans in Tech Summit. I'm sure you're going to hear more about that today. If you're in part of our accelerator or one of our mentors or investors, then you get to go to our Venture Summit, which is coming up the first week of December. And believe it or not, we're already getting ready planning for South by Southwest online in March. That's already kicked off and it's well underway. So lots of good stuff in the works. But today, you want to focus on plugging in, meeting people, introducing yourself, and being part of the community. Turn your video on, participate in the chat, ask questions, put yourself out there. It's a little harder when we're doing it virtually on video than when we do it in person. So you gotta put a little extra effort in, but it's worth it, I promise. So thanks for being here today. I'm excited to get to meet you. I'm excited to help introduce you to other people here. I do office hours every week, which you can sign up for on Thursday afternoons. And you can email me at josh@quityourjob.com. And I'd love to try to help you. Also, Slack's another great place to find me. Can't help but mention today is election day. I hope everybody's already voted, and if not, that's the next thing you're going to do after Immersion Day. I've got my Country Over Party shirt on because while I know that this is a really charged election with a lot going on, my biggest hope coming out of this is that we come out of this tomorrow or the next few days as a more united country and really ready to work together on both sides, all parties, to really make our country better than it has been the past couple of years and make us work together better. So that's what I'm really looking forward to most. But I hope all of you have used your vote and made it count. So next up, we have an awesome founder stories with one of my dear friends and one of the top mentors, investors, entrepreneurs at Capital Factory in Austin, in Texas, and that's Ross Buhrdorf. Ross is by the definition of a serial entrepreneur. He was involved in some of the first computer companies back at probably a computer company many of you have never even heard of, HAL Computers, but one of the first. He was at one of the first internet search engines. Before there was Google, there was Excite, and he was an early part of the team there. He went on to be the founding CTO at HomeAway. That's when I met him. And HomeAway is one of the biggest recent success stories in Austin, with a $3.9 billion exit to Expedia. And that's no surprise what led him to what's next, ZenBusiness, the company that he's working on now. That's another rocket ship, a company that's in the Capital Factory Accelerator that we've invested in, that I've had the pleasure of watching the whole journey from. And it's one of my favorite stories because Ross actually met that team that was working on that early business when they were in the Accelerator. And he kind of got involved as a mentor, as an investor, and then decided to join the team and became the CEO and took everything to a whole new level. I'm going to hand it off next to Jonathan Chavez on our venture associate team, and he's going to be talking with Ross. I'm looking forward to meeting all of you soon.
Hey, thank you so much, Josh, and Rebecca as well. So I am so excited to be helping host this today. Ross, thank you so much for joining us. I'm sure all of us are ready for the various nuggets of wisdom that you're about to impart. So I think it might be helpful to start with, rewinding the clock back a little bit and hearing more about your, upbringing, your background, and really what drew you into the world of tech, if that's all right.
Yeah, great. Hey, I'm glad to be here, Jonathan, and thanks, Josh, for the introduction. I hope I can answer some of you guys' question and share my story. So what got me into technology? Well, I've got a computer science degree from the University of Texas. And so I guess that kind of got me into technology, is my education. And I was just starting in Austin when technology was coming to town. I've got a degree in computer science from UT. So I've been a programmer. I started out as a programmer, and, I don't know, I went to the dark side and quickly became a manager. And then, I just got involved in startups early on. That's really what got me into technology.
That's awesome. So you were into startups before it was cool. I think that technically
before it was cool. Yeah, I guess it was. Yeah, I was the cool kid before it was cool. In the old days, we used to call those nerds, Jonathan. So I guess I was an early nerd. Yeah, I think I guess it was an early nerd. When I first started in high school, got involved in it. That was when you guys really, shows my age. There was a portable computer called the Osborne, which was out of Houston, Texas, if you can believe that. You guys Google that. The thing weighed about a ton and was the size of a large piece of luggage. It was a portable computer. But that's when I got involved. C programming language wasn't even a language. Pascal was probably the most advanced language with a debugger on the planet. Anyhow, I just got involved in it because I was interested in it, and then got involved in startups and entrepreneurship because it was exciting. And I worked early in my career for a big company, and that just wasn't my idea of fun or excitement or just moving ahead in the world.
Awesome. Thank you so much for sharing that, Ross. Now, fast forwarding a bit to 2005, from my understanding, you joined HomeAway not too long after inception. I would love to hear what was the spark or insight or motivation that led you to become their founding CTO.
Well, I was coming off of another company, and I don't say it was a failed company, but it wasn't a great success. And they were looking for, a CTO. I came in probably 5 months after they had established. I was the founding CTO, so I was the first CTO there, and they'd already acquired 5 companies. And so they brought me in via investors, which was Austin Ventures, brought me into that, interviewed, and I got along great with Carl and Brian, and the rest is history. Did 5 acquisitions. I think we ended up with 26 plus acquisitions over the 10 plus years I was there at HomeAway. The spark for Brian and Carl was just all of these mom and pop vacation rental businesses, but they were all regional and they were small. And their idea was to bring them all together and roll them up into a bigger company. And the real innovation for HomeAway was really rolling up all those companies and then making the world's largest vacation rental. We really created this segment of vacation rentals, which was, that's a pretty big deal to create your own segment in or create a new market place with vacation rentals.
Absolutely. Now, I would love to hear what some of the early challenges you encountered with HomeAway, especially when it comes to defining a new category. Sometimes there might be a little bit of hesitancy from consumers to use a product or really understand how it works. Love to hear some of the early challenges you encountered.
Yeah, I mean, with any company, there's so many challenges. It's hard to name them all. But certainly, with vacation rentals, I think it was, there really wasn't a leader in the segment. And so, just part of building out all the SEO position, all of the paid positions, the website, pulling all the technology together. I mean, that was a heroic effort by me and my team, and just really creating a new category. Now, we did this over 11 years, so it gave us plenty of time to develop a new category. But I mean, I think some of the early challenges were with any marketplace is having enough inventory. And so we did that via acquiring all of these companies and aggregating them into a big set of inventory, which is a big deal, because as a user or of a two-sided market, as the consumer of this marketplace, it was important that you'd be able to come to a single website like HomeAway, and be able to search for what you wanted and be able to find it on those dates. So I think with any marketplace, the two big pieces I always, of course, there has to be a demand for the marketplace, but assuming that there's a demand there, it's safety. It's got to be a safe place. So if this is a new market, you have to be, as the traveler or the consumer, you have to be assured that it's a safe place to do business. So we spent a lot of time on guarantees, traveler guarantees. We'll refund your money. Don't worry about fraud. And then we spent a bunch of time on fraud, making sure that the listings were good and validating that they were real people that were putting up listings. So those are just some of the problems, and then just all of the problems with rapid growth and scale. But
good problems to have, right?
Yeah, good problems to have. And then once people start using it, then word of mouth comes around, and vacation rentals really caught on pretty quick after that, because it's just such a great experience. And I think that's super important, is for all of the folks that are starting up their own businesses here, is to make darn sure that people want to buy the product you're selling. So it was easy when people love vacation rentals. Once you have that experience, you kind of never go back to anything else.
That's awesome. Now, you were at HomeAway during 2008 and 2009, and while the underlying factors that drove that particular recession and what we're going through right now are different, there's certainly parallels to be drawn, right? I would love to hear more about what that experience was like.
Yeah, I mean, when they had the economic collapse in 2008 and 2009, that's when we raised a $250 million round to acquire VRBO, which is now the name of the company, VRBO. And so that was a big round. We had raised that round right before the collapse. And if you recall, the collapse happened like literally on one day, and the world changed. I think, the parallels are that there's a huge opportunity with these seismic changes that economic collapse was around the, mortgages. And so that gave, I think, us a lot of opportunity. We had plenty of cash on hand. And, we really didn't see a big decrease in our business. We did lose some, mostly the decrease were in Florida and Arizona. Some people lost their vacation rental homes. But the truth of the matter is we always felt like our business was recession proof, and it turned out being recession proof because, and I think we're seeing the same thing right now, at least in that market, in that people are going to drive to vacations, which is what HomeAway is. People drive to their vacation spots right now, especially if they're afraid of air travel. So, I know the Texas coast is busy. I know Florida is busy. Everywhere you can drive to, Colorado, et cetera, these drive-to vacation markets are taking off. And we're seeing the same thing with ZenBusiness right now with the pandemic going on. Our business is just exploding. I think the moral of the story, or the punchline of the story, is, in crisis or in great change, there's opportunities, and you just have to find them.
Absolutely. And I think that's advice that we should all heed. So, kind of turning the clock forward a little bit, I believe HomeAway was acquired in 2015. And as Josh mentioned, it wasn't too long after that you joined ZenBusiness. I'd love to learn a little bit more about what what you've been building at ZenBusiness and what really drove you to join.
Yeah, I took the plan after we sold to Expedia is all the executives left after the sale. I was planning to take a year off. I made it about 10 months, and I got tangled up in one of these darn companies out of Capital Factory that are always so interesting, and I learned so much from. And I got with a couple, young entrepreneur, I call them bloodthirsty entrepreneurs, like the rest of you folks here, and got involved with them. And I thought they were onto something. We pivoted, and I think there was a pivot in the works, and I invested and became the CEO. I got so excited about the idea, and, it's pivoted and evolved. I think most companies, where they end up and where they start are usually quite different. And HomeAway was no exception. So I think it evolves as you get smarter, you evolve the idea. And fundamentally where we are right now with ZenBusiness, which has just had explosive growth, is, the punchline is we are Shopify for the service sector. So the service industry makes up, 85, sometimes 90%. It depends on what stats you're looking at, of the U.S. economy and the global economy. It's a big part of it is the service sector. And we really are everything you need for a service business, all the way from the ideas for a service business to the creation, the formation of it via LLC or S Corp or even a C Corp, to a website, domain, email, everything you need to market your service, and then all the back office, accounting, taxes, merchant account, all of the fintech, banking, everything. So basically everything you need to run a service business. So i.e. the punchline is Shopify for the service segment.
Awesome. And from my understanding, ZenBusiness is a public benefit corporation. For those in the audience that might not, 100% understand what that is and what the significance of that is, could you speak to that a bit?
Yeah, it's a PB, Public Benefits Corp, or a PBC, the acronym for everything. And really the thesis behind it is just it's less than 10 years old. The idea that there is, more, this came from conversations around the economic roundtable, when some of the biggest companies on the face of the planet said, hey, there's more important things than just shareholder return. We need to give back to society. We need to be, for the betterment of the world. And that's when some folks came out and said, let's create a new formation type, and it's a public benefits corp. And we have to by charter, by corporate charter, we have to do good in the world in order to be a certified B Corp. And what we do is part of our business is in benefit of solopreneurs. And so we're very focused at these, what we call single non-employee firms. So these are single individuals working out of their household. We get them up and running and being successful. So that's part of the benefit we do. We also do micro lending it changes every year. This year we're focused on U.S. Female run businesses is where we loan money. We don't loan, we give money through a lending platform.
That makes sense. Real quick before we go on, I want to mention to the audience that we do have a Q&A session coming up. So please fill the chat up with questions that you want to ask Ross. So kind of while we're wrapping up this portion of founder stories, I have to say, real quick side quest here. We talked about this earlier, but the Santa Fe Institute to me is absolutely fascinating. One of my favorite books was written by someone who was affiliated and worked with the Santa Fe Institute. So I have to ask you, what attracted you about that particular institution? And could you speak about any interesting topics or concepts that you're currently working on with the Santa Fe Institute?
Yeah, I'm on the board in the Santa Fe Institute. I'm actually up at I've got a house in Santa Fe, and the Institute is literally over on the other side of this mountain we live on. I'll just bring it really, they study, they're the creators of complex adaptive systems. What was the name of the book you read, Jonathan?
It was Complexity, a Guided Tour by Melanie Mitchell, I believe.
Okay, so I know Melanie. That's a great book. She's written a lot of books. She is an expert on artificial intelligence. She's got a brand new book out now. And I view, and this is really one of the things that I get excited about the Institute. Now, the Institute is, a top 10 think tank. They're nonpartisan, so they don't have a political agenda, and they deal with issues that really the world is dependent on being solved. So energy, clean water, clean air, the environment, economic matters, food, just the biggest problems that we face all around scale of the globe, and keeping us from this potential impending economic or environmental crisis. So they really deal with big issues. One of the things that I get excited about complex adaptive systems in general is so many times when, especially for entrepreneurs, we have a really simple model for entrepreneurship, and it's this, what I call the CAC to LTV ratio. If you guys are familiar with that, you should be. If you're not,
yeah, absolutely.
With respect to all of these, the businesses that we put together, and so that's a pretty simple model. But startups are really complex adaptive systems, and so Bill Gurley, who's on the board at the Santa Fe Institute, has written a couple articles on this subject about that. Startups are complex adaptive systems, and the point here is that everything you do in your business has the potential to affect another part of the business. So you push on LTV, and then your CAC goes up because you're trying to sell more things, and you can bloat your cart, and so then the world adapts with, let's do a thing called product-led growth, right? And you guys are familiar with that strategy. So product-led growth is just another set of agents or another set of ideas that affect this complex adaptive system that we call a startup. And it's really to, hey, how can we potentially outsmart, or what's another strategy or a set of agents that affect this system that we can apply to drive LTV and LTV up and CAC down.
Mm-hmm.
So, that's what I love about the Institute, is just this multidisciplinary approach to solving problems. And for me, it's a startup, or, I view the whole world as this complex adaptive system where we're all separate agents. The pandemic, I think, has really just accelerated a trend that was already happening, which is more and more people, or what I call the de-evolution of the corporate world, where we're all being set free from our corporate jobs and to become, independent contractors or independent agents, or, start our own business. And our new startup at Capital Factory.
Absolutely. And what you mentioned reminded me of one of my favorite quotes from that book. Complex systems are sensitive to initial conditions, I believe is the phrase, if I'm remembering it correctly. And to your point about startups being complex adaptive systems themselves, yeah, absolutely. There's so much that happens at the beginning that can have, implications or ramifications further on down the line.
That's right.
And so before we go into Q&A, there's one last topic I want to hit. I would love to get your opinion and your thoughts on the future of tech in Texas. Why is this time different? What excites you about the Austin scene today, and maybe Texas at large, and kind of things related to that?
Yeah, I'll tell you what. You're in Dallas, right, Jonathan?
I am.
Yeah, and so I'm on a bank board in Dallas. It's a big bank. It's American National Bank of Texas. It's a big bank, 30 branches. It's in the Dallas-Fort Worth area. Mm-hmm. And a multi-billion-dollar bank. And one of the things that, as I wanted to get interested in or get educated about fintech. That's why I joined a bank board, to really understand banking and what the basis of fintech. And one of the things that I learned at that board is we brought in a guy out of Austin that talks about the demographics. And I mean, you guys, the Central Texas, all of Central Texas, and South Texas too, are just exploding, both with population and economic base. It's the Dallas-Fort Worth area is just gone crazy, and Austin continues to go crazy. So if you look at the fastest growing counties and metro areas, it's Austin, Houston, Dallas, Central Texas area, San Antonio too, are just having this huge growth. And I think, that has a huge impact on where the population's going, and where the creative class, with a huge university like the University of Texas, top 5 computer science schools in the country, and places like Capital Factory and all of the industry and investors that are moving into Central Texas. And every day there's some new billionaire that moves in, or some new movie star. I mean, it's just I think it's just this fabulous growth. And so I think it's one of the fantastic places to be. I mean, you can be in Silicon Valley. I think you can be in Austin, Texas. You can be, in the New York, Boston area. I think those really are the areas is Central Texas, and then the coasts.
Awesome. Well, it sounds like you're very bullish on the future of tech here in Texas.
Oh, yeah.
And thankfully, we're all part of an organization that is uniquely positioned to take advantage of a lot of these changing macro trends, right?
Yeah, absolutely.
Awesome. So I think it's time to introduce some of the questions brought in from our audience. Let's see. All right, we have one coming up from Sean Matthew. Is a PBC a legal tax designation like a C Corp?
Yes. I mean, yes, it's another corporate formation, but the tenet of it again is you have to do good in the world. You have to prove your benefit. It is a public benefits corp. So yeah, it's like a designation. You have to go through, a different formation type. It's not a big deal. Getting the public benefits corp or the PBC is easy. It's getting the certification, a certified B Corp, which means that you actually do good in the world. And that's through a third-party organization certifies you. So that's the next step.
Good to know. All right, next question from Austin Podowski. Hey, Ross. He's here with Xfia, I believe is pronounced. Going from selling PCs to B2C services, when did you see the change in reaching the consumer digitally, being the approach was so young when you swung?
Oh, man, let's see. That is an interesting question. So, going from selling PCs, yeah, I mean, I think, these epochs, I would call them, let's call them these technical epochs. The first one was when, IBM had mainframe computers, and then, Digital Equipment Corp came out, DEC, and then another company called Data General, who I worked for, Data General came out, and those were called mini computers. So it went from mainframes to mini computers, disrupted them, which made them more accessible for businesses. They still weren't in consumers' hands. And then, the first PCs came out, IBM, Hewlett Packard, Apple, of course, led the way here with computers to the consumers. And then that was kind of that PC epoch. And then, we were all building software for PCs and, interfaces between PCs and microcomputers, these bigger microcomputers. And then the internet, exploded on the scene. And I think, we're still really, amazing to me, we're still really are in the internet phase. I know that mobile would be another epoch, but it's this huge overlap with the internet. It's I think it deserves its own epoch, but it certainly is an overlap anymore. You can't tell the distinction between the two. We build everything for both at my company. So I still think we're in that epoch or that revolution. I know there's IoT and all of these other pieces. I think you brought up Melanie's name. I think we're still, I graduated from University of Texas, and I did all of my graduate level stuff in artificial intelligence way back when we had expert systems. And I know, we still haven't seen the full promise of artificial intelligence. I think it's far more advanced now, and you can buy artificial intelligence functionality, and you can apply it in off the shelf. But that's probably the next big epoch. But we'll see. We'll see.
Awesome. And then next question, Tony Portman. Hey, Tony. Ross, what do you see as the future of work for commercial real estate post-COVID?
What do you see as the future? Yeah, we completely closed down our office, if that's what this question is about. We are a remote office right now. We just couldn't see paying rent in downtown Austin for an office that was empty. And I think a lot of people have done that. We as a company are far more productive and are hiring and have a much larger pool of folks that can work for us, and they're spread across the whole country. I also think it has a huge, as far as the team thing, it also has a huge leveling effect, because it you had this effect of like, oh, if you're not in Austin, you're not part of the team, you're not, you don't have the same opportunities to advance. And well, that just doesn't exist anymore because everybody's, remote now. I haven't seen my team in person since, March 5th. We've all been on Zoom. So I don't know, man, about commercial relations. I would say, from my experience, it's not good. But in a place like Austin, they could, turn it into, flats for everybody. I mean, there's plenty of demand to live downtown, and it will come back. And I think people will want to have an office, but I think the world's changed permanently.
Yeah, every time I see that question, I get some real Neil Stephenson metaversy vibes about what the future could be. So next question from Sean Matthew. Since we're in a recession, what's your advice for young startups that are planning to launch financing rounds? Should we be bullish or bearish in speculation?
Well, I think that it's a great question. Two answers. One is if you're raising in a recession, I think you should be first. You should be bearish in that. Make sure you've got enough money to do what you pull back, and make sure you have what I call your fallback plan in case you don't get funding. So the world's unpredictable in a recession. For startups and for lots of businesses, maybe it is predictable in that they're going to fail. But from your point of view, when you're a startup, you control a lot. When you're a startup, you control the size of your team. You control what you spend. You control how you spend it. So I'd be very, bearish from that point of view. But once you've got your ducks in a row, as I say, and you have your plan, then go out and be bullish, because you can be bullish. Okay. I know I've got it covered, or as best as I can get it covered, and then, go out and try to make it happen. The one thing that startups have, it's their main currency for startups is risk. I mean, this is the thing that you have the most of. And if you're not, you need to use it in a judicious fashion, but you do need to use it. And so this is the advantage that my company has over the bigger incumbents that I'm disrupting, is they can't afford to take the risk that we can, because they're not startups. And, they're funded in different ways, whether they're public or they're older companies. They have to make their numbers, and they're very sensitive about taking any risk. Whereas I'm, hell bent on taking risk, because that's, the way you swing for the fences and make a big splash.
Awesome. So I think we're going to be wrapping up here, but I want to ask one last question, and I'm totally stealing this from one of my favorite podcasts, Ross. I'm going to try to ask this anytime I run events of this kind. Whether it's in a personal or professional setting, what's the kindest thing that anyone's ever done for you?
The kindest thing that anyone's ever done. Well, I think, it's what I hope I do with all of the startups here is give me a chance. I mean, I think that's all that anyone wants in this context, and, on the planet, is to, be heard and be given a chance and be given a helping hand. So I'm all for that. And that's why I love what Capital Factory does. And the at the end of the day, on your deathbed, it's not going to be about, what did I get? What did I grab? What did I hold on to? It's really, what did I give away? And so, I'm all about pay it forward and and helping each other out. I mean, that's what we're here for.
Awesome. That was a great answer, Ross. All right. I think that about wraps it up for the founder stories. Thank you so much, Ross, for taking part in this.
You're welcome. How'd I do?
Yeah. Thank you so much. And then before we end, Ross, can you just tell everyone how you prefer to be reached? If it's LinkedIn, email, Slack, if you're on Slack, do you have a preferred method?
Yeah, just send me an email at Ross, ROSS, at ZenBusiness.com, ZenBusiness.com.
Okay, awesome. All right. Well, thanks so much again for participating. And we will see you later. And thank you, Jonathan, for moderating.
Thanks.
All right. Bye, y'all.
Thanks, everybody. Bye-bye.
All right, so we are going to be moving on to our founders pitch presentation now. And this is going to just highlight our newest members in our Accelerator company. Each of them is going to have 4 minutes to pitch. And then we are going to allow for about 2 to 3 minutes of Q&A afterwards. So get ready to type your questions if you do have any for any of the founders that pitch. And y'all got a little preview to our first pitch, who is going to be Kimberly. And I'm going to let Kimberly say the name of the company because I just tend to butcher everything. So Kimberly, I can see you. I can see your screen. And yeah, please start your 4-minute pitch and correctly, obviously, say your company name.
Definitely. Thank you very much for introducing me. Hi, everyone. My name is Kimberly John, and I am the co-founder and CEO of FastSusu. My company provides a digital solution for rotational savings groups. At FastSusu, we envision a world where financial equity allows for the everyday individual to achieve their goals towards saving and making important purchases. Did you know that 1 in 3 Americans have less than $400 in emergency funds saved in their bank account? This has impacted generations across the board, especially millennials who are at a disadvantage when it comes to getting their lives started. Many are unable to buy homes or start families because their income narrowly covers their debt and living expenses. And there are so many reasons why people cannot save. There's the inability to get a loan or refusal to due to high interest. Astronomical student and credit card debt burdens our society every day. Branch banking is not a viable solution for many underserved communities, and paychecks have lower purchasing power compared to former generations. However, some communities across the globe have found a way to combat this. They participate in a process of saving known as rotational savings, where members rotate funds through a system of borrowing and lending from peers on a scheduled basis. For example, Mary starts a savings group with 4 other friends. She creates a savings plan where each member contributes capital on a monthly basis. At the beginning of each month, one member gets a turn to withdraw the full amount, and the process continues until each member has had their turn. This process helps users save capital at a faster rate, so they can invest in what really matters, like family, travel, and tuition, all while avoiding the high APR rates associated with taking out a loan. The cycle continues until each member has had a turn to collect a lump sum. Yet, there are issues with this way of saving. Who is going to manage these payments? And whose turn is it to collect? What happens when your friend misses or is late on a payment? At FastSusu, we offer a solution that digitizes this concept of rotational savings, granting our users the opportunity to connect to groups with similar savings plans, while establishing a financial history and earning discounted products and services. In addition, users who make payments towards the funds they borrowed can report their on-time payments to credit bureaus, thus establishing a credit history and reducing defaulted payments. By increasing access to low-interest peer-to-peer loans, we are reducing barriers and stimulating economic growth, offering affordable loan alternatives to the everyday American. And in fact, rotational savings accounts for $650 billion in rotating funds across the globe, and it is practiced in more than 30 countries worldwide. With the 30 million immigrants hailing from these countries, we may potentially reach a total addressable market of $30 billion. And those who will most likely use our services are individuals earning a medium income with an average age between 25 to 50 years, awarded an associate's degree or higher. Today, we have competitors in Africa, India, and beyond. However, in the US, competition is limited and digitizing rotational savings is a growing trend. Most competitors lack mobile applications, do not allow its users to report on-time payments or charge users an expensive fee for managing their group savings cycle. There are various earning pathways for our application, yet a direct business model would be transaction fees, which we charge users 2% of their earnings received on their collection date. And by implementing a freemium model, we generate revenue by giving users the option to join a plan that allows them to save with more members in a group, meaning greater access to capital. We will target our customers through a series of social campaigns, targeted ads, direct marketing, a referral program. Yet our strong point is that we predict our customers will bring customers. In order to save, users need to invite friends or find users on the platform. This influences a form of customer acquisition that can be generated independently. Today, a customer acquisition cost is 5 cents per user. We have more than 1,300 registrants awaiting release of our application. We have currently built our MVP and are awaiting release next week, half of which committed to using this model for their savings journey, and a total of 7,000 monthly website viewers to date, with new subscribers each day. Today, we have successfully partnered with Douala and Plaid and have placed in a few competitive pitch competitions and have recently been accepted, as you know, to Capital Factory's Accelerator program. With our mission in mind, I am confident that FastSusu can help users reach their financial goals, as my co-founder and I have witnessed the power of rotational savings within our own communities. We are dedicated team members, passionate about technology, and using our experiences and professional backgrounds to increase financial equity for citizens across the United States. We are seeking a pre-seed round of $800,000 for 18 months of financing. And our team is gearing up for our MVP release of the application with plans to reach 30,000 users at the end of our runway. Thank you.
Awesome. Thanks so much, Kimberly. And I'm just going to jump into some questions. So let's see here. What advantages does FastSusu provide savers over more informal types of rotational saving groups?
Yeah, absolutely. So the informal traditional approach to rotational savings is generally handled through physical tender. With our application, we are allowing these communities who are familiar with this savings process to get on an application that manages this process in a more visible approach. And in that sense, by saving with the members who are on the application, you have visibility into a payment history that you've made towards your friends, therefore building credit or establishing a credit history just for saving, which is something most individuals did not realize they could do.
Wow, that's awesome. I mean, this is really obviously applicable right now. I know so many of my friends, trying to save, but have a hard time doing so. Okay, so let's see. Second question, which features are you most excited about bringing to the market?
Okay, so the first feature I would say is the ability to see what groups are being created and actually discovering people who are saving for a same goal. For example, we have this idea of Coachella. In the event that Coachella is happening next year, hoping that things go well, you can find the individuals that may have created a group called Coachella, and in a sense, actually see these members and connect with them. Therefore, you may have the opportunity to find these individuals once you get to that event, and therefore, I think the best part of this application really is the connections, the feature of that.
Yeah, definitely. All right, and then the last question, how do you prevent a member from disappearing after taking a loan?
All right, so yeah, that's our most asked questions, and we're actually working through this. So there are multiple steps in which we try to defer our members from doing that. There is a rating process in the application, but before doing that, we've partnered with Douala and Plaid, our API providers. There is an application process. Not every member will have access to this application. You need to have a good financial history. Filing bankruptcy or having any hard marks on your credit may deter someone from getting onto the application. We want someone who is trustworthy. So there is this process of saving slowly. You are not given access to the highest amount of lump sum when you begin the application. You start small, and then there is the payment reporting feature, which means that users who are saving, if you default on a payment, you will be reported for that. It's just a way to mitigate that process, but we are actually working towards ensuring that users receive their payments by partnering with credit unions, such as our competitors.
Awesome. Okay. All right. Well, thank you for all of your pitch and then all of the answers to your questions that were asked. We are going to move on, but if you would like to head over to the YouTube side of everything, that way, if anybody has any additional questions to ask you, they can do so over in the chat.
Thank you.
All right. Thanks, Kimberly. We are going to now move on to our next pitch. Sean with Inorsa or Inorsa. And Sean, I do see myself on your screen right now. And if you want to switch over to your pitch, okay, awesome. Yeah, don't want it to sound all weird. All right. Did I say? I mean, I said it two different ways. Did I get one right?
Yeah, Inorsa is the right
Inorsa. Okay, awesome. All right. And if you just want to put it in presentation mode. All right. You have 4 minutes to pitch. Take it away.
Well, hi everyone. I'm Sean, CEO of Inorsa. Inorsa is the fastest way to create 5G telecom and IoT construction drawings. A lot of you might have seen these. This is what we call macro cells. This is the essential part of 4G and 3G and everything before that in wireless industry. What you're going to see a lot of are these. This is called small cells, and they're usually installed on utility poles, light poles, anything above 25 feet on the public property. Now, the difference is with macro cells with 4G, we had what they call what we had high range, low capacity. You could build 100 towers all around Austin and surrounding areas, give coverage. They call it low band. It's perfect for phones and personal use. Now with 5G, we use something called millimeter wave that has low range, high capacity. Now instead of 100 towers, you would need 10,000 towers on average per city. So it's an insane amount of IoT devices we are installing, and this is the essential part of infrastructure for self-driving cars, other IoT applications, smart cities. Now, the challenge that comes up with building these, this is a repeatable engineering process. It's high volume of work, short period of time. It's similar in all areas of industrial design, but there's no scalable solution. Basically, every project is handled right now as one-off when it comes to construction of it. Just to show that how big this problem is, Verizon, AT&T each are spending for $20 billion a year on this market. It's about $300 billion altogether by 2025 on the 5G deployments. 10% of that goes to what they call architecture engineering, which is us. Engineering software companies that are used now and very manual make about $6 billion annual recurring revenue, and engineering services overall is a $230 billion market in the US. Again, 10% of it is the drawings and things like that. So what we've done is we've taken the repeatable part of engineering, which is calculation and the drawing production, combining them together, essentially turning engineering into commodity because of the repeatable engineering process. Just to give you an example so you have an idea how this works, this is one of our projects. I'm just going to share what I'm allowed to share with you. This is just a cover sheet. All the project data gets auto-populated. We generate the location, figure out where the installation may happen. We check everything for 127 criteria. This is another sheet, an electrical sheet here. So we've been very successful so far. We started the company about 7 months ago in February. We've generated over 120K in revenue with our purchase orders. Right now we're at 140K. We've completed over 120 projects. We already booked. Based on our bookings, we are going to generate 5 times our revenue in 2021, and that's assuming we are not going to get any new customers in 2021. We are onboarding some big customers, one of the biggest infrastructure owners in the US. We are becoming an approved vendor with them, and we've had incredible progress with some other IoT applications as well. Our business model right now, we're basically selling credits with our projects. We do packages of 10 plus projects, 50 plus projects, 200 plus projects. And this has helped us fund our progress. And in 2021, we are moving to a SaaS product basically when our automation gets above 90%. So there's not a lot of human interaction. And after we build this product for telecom, we are looking forward to move into oil and gas and other parts of industrial design. Again, my name is Sean. I've done over 1,000 telecom projects. I used to run the biggest 5G deployment for Verizon in Central Texas market. And I actually brought 5G to Texas. I've completed over 200 oil and gas projects. I've designed a lot of infrastructure for cities around Austin. I co-founded a SaaS startup before. I just don't have that slide because of time, but I also have an incredible team of 5 engineers and 2 support staff behind me to help our success. And we are right now starting to raise our seed round, and we are happy and excited to be here with Capital Factory. Thank you very much.
Awesome. Thanks so much, Sean. We are going to move on to our questions for you. See here. So what is the sales process for selling to telecommunication companies?
That's a good question. So the way it works with telecom and 5G especially, there are 4-step process: manufacturing, what they call site acquisition. Basically, they have to pick up the site and figure out where to build it. And then us, engineering, and then construction. Each of these 4 companies in these 4 areas would come to us, and our main sales strategy is webinars, content. We have a lot of credibility in the industry, especially in Texas, so people know us. And right now, 90+% of the sales is handled by me, but it's just because of content more than anything else. It's very educational. Not a lot of people are doing the way we're doing, like handling the business the way we're doing it. It's very consulting based right now with a lot of other people, but because of our automation, we're just able to handle a large volume of projects.
Awesome. All right. And second question, what is Inorsa's competitive advantage?
So, I mean, it's the saying that you can only have 2 out of the faster, cheaper, better. We are actually faster and cheaper and better. We can handle a large volume of projects. We are specialized in this. We started with 5G when it was very new, so we exactly know what to do. Our competitors are not other engineering companies. Our competitors are outsourcing companies in other parts of the world that do it for cheaper, but they are not specifically specialized to build on 5G and especially public property. So when it comes to 5G and IoT applications and smart cities, you're building on public property. Nobody else has done this before. So this is very new to engineers too. Everybody else is kind of failing in this process because building in public property requires a totally different set of skill set and engineering understanding than building in private property. So you have to have the cross-functional expertise between telecom and also building for city infrastructure and things like that.
All right, faster, cheaper, and better. All right, well, we are going to move on to our next pitch, but if you would like to hop over to the YouTube side, just in case anybody has any additional questions for you, please do that now. All right, thanks, Sean. And our next pitch, I'm sure many of you already know her. We have Toni Portman from Walkabout. Hello, hello.
Hey, hello, and thank you so much, and I'm so excited to be here. I also was really excited to hear Ross's answer to my question about what's going to happen with commercial real estate post-COVID, especially for the small and medium business. I hope by the end of this that you all not only want to invest, but you want to be a client of virtual real estate, because the problem is a big one. And Ross touched on the advantages of working remotely, but there are some real disadvantages that are starting to emerge. Number one, we've got Zoom fatigue. We've got calendaritis. We've got so many tools and technologies, and Capital Factory is right in the middle of them. I was counting today, we've had 5 tools that we've all gone to as we've been doing this. And we want a place to go. We're human beings. We want to connect with human beings. And when I don't have a place to go, I start to lose company culture, and I start to lose connectivity with my community or my team or my tribe. So I think the very best way to do this is to actually show you what I do and the way I go to work. So this is our building. This building can be anything you'd like it to look like. In fact, in Dallas, Texas, we've got FBFK, who's a law firm. They've got up on the tollway offices in LA, in Houston, and in Dallas, and they all come to FBFK to go to work. When they come in, they badge in very securely to their office. And the very first thing that they do is they check it out and they see who else might be in the office around. So you can see this is our office at Walkabout. Some of my colleagues have red circles. That means their door's locked. I'm here in my office, and I can literally walk down the hall to my friend Patty's office and notice that your offices are branded. We just learned that she's going to be a grandma of a new little baby boy, which is kind of fun. And we decorated her office with congratulations. But anywhere in the world, we can connect with our colleagues on that floor plan using what we believe is the highest quality of audio and video, and we can change rooms. So those rooms are interoperable. We can go on video, we can go on audio, and we can use, I think, the world's best video camera. So if you're Zooming or webbing or Teamsing, I can move my video around. I can actually make it bigger. Patty can do screen share with me, and we can have up to 10 people in an office simultaneously screen sharing. She can do a very cool picture-in-picture screen share. And while she's doing that, I can pull up what we fondly call our application console. In our application console, we can put all of our most commonly used apps. And with the touch of a button, we're into them. So there's Patty doing her screen share. I can do picture-in-picture and keep her in the screen. I can go full screen, or I can escape out of that and come into my overall looking at her. When we do team meetings, 10 people in every room, up to 50 people, 50 in a group room. And then I can walk down the hall and go to rooms in context, which includes things like a training room where I can go and do training, or even the water cooler conversation, which I think is really cool in our Walkabout Cafe, so that we can have a cup of coffee and use even a social bot to have some fun, like puppers saying happy birthday or happy anniversary. The final feature is a robust, unbelievable, better than Slack chat, because it has a Slack bridge built into it. So I can bridge my help desk in Slack and then send audio, video, and chat across the globe. So that's our platform. We're really, really proud of it. And we are excited to be addressing a market that I don't even think has been sized yet. If you think about it, pre-COVID, this was a $185 billion market with video conferencing tools and virtual offices. But now, who knows how big it is? Prop tech is real. It's a space that everybody is clamoring to be into, and it's where investment dollars are going. Our traction, this is through September. If I updated this through October, which I'm going to do hopefully tonight, we're at over 75 different clients. We've got about 3,000 users. We've got an MRR right now of probably around 30,000 and growing at 25% compounded growth rate. And we're everywhere in the world. In Japan, we launched not only Hitachi with 1,000 users on 22 floors, riding the elevator up and down their virtual real estate, but they're also a reseller, and they have already landed Mitsubishi, PwC, and we've launched NEC and NTT. So we're really excited about Japan. Our team is second to none. This is the sixth startup I've done. I swore I wasn't going to ever do another one, but I saw this platform and I fell in love. Our COO and co-founder is an operational execution engine, and the CIO worked for me in 2 other companies along with the rest of an A team. Our pricing is software as a service, which makes it really affordable. Audio, video, chat, and all of your custom real estate for $10 a month if you've got over 100 people, or even a solopreneur at $20 a month. That makes for a very profitable company. given the software as a service model, which is why we are raising our second seed venture round of $1,750,000. We raised $1,350,000. I'm proud to say 700,000 of that has been since May of this year. So we closed that first round, opened a second seed round. We know that 58% of it will go to furthering the already outstanding tech build, and then 35% in sales and marketing. And we are super excited to be solving the problem of what do we do about virtual real estate post-COVID? So, questions? Please tell me you're there.
I thought I was going to get through this entire event without talking on mute, and I'm so sad. I didn't.
Tell me you're there.
I didn't. Oh my gosh, I'm so sad. I really thought I was going to do it this time. Oh well, it's to be expected. Well, I was going to say that this is the third time I think I've seen you pitch, and then I actually did, a longer version of your tour on Walkabout. And my question for you is, what is the competitive advantage of Walkabout compared to other platforms like Sococo and things like that? What is your competitive advantage?
Yeah, that's a great question. And we like to say that there is no competitor like us, but you guys are living proof of the Sococo environment. And then the other, I think, tool players out there like Teams and like Zoom and like Slack. The cool thing is we're virtual real estate, and none of these players actually has what we have, which is a place to go to work and the feeling that you can brand and create culture just like you can a real building. So we like to think of our attributes or our feature sets that include place, presence, and then connectivity. All the tools kind of do connectivity, but what we do is, and I didn't even have time to show you, but the application console, the productivity bots, the experience if you're a guest when you come in, where you're greeted with a virtual receptionist and you can have custom branded offices with your ability to teleport not only to your team, but across floors with an interactive floor plan. Those are our competitive advantages, and we think we're way cooler than Sococo.
Awesome. All right. And you just mentioned that there is the receptionist experience. Can you explain that a little bit more? What is that like? What does the receptionist, tell you at the beginning? Can you brand her, them, him?
Yeah, great question. So if I were to come into, and I'll come in and try to come see me, that might put me right into my office since I'm already logged in. But it does. I'm going to go ahead and log out because I'm already logged in so that I can come see me. So I'll log out. So when I want to come see anybody, we have the opportunity to go in and say we want to, and I'm going to back out and come in, just call, see it. It knows me. This is the good news, and the bad news about virtual real estate is it already knows who I am. So I'm just going to open up a real quick incognito window and then trick it to say I'm not really there. So when I come into Walkabout, I'm in, and then when I come to see, so if I'm Rebecca and I'm here to see Tony, what everyone gets is on their cell phone a lobby and then a virtual receptionist. And the virtual receptionist says, hello, welcome to Walkabout. I'm going to tell Tony you're here. And then, believe it or not, on my cell phone, it says somebody is in the lobby waiting for you. And I just summon the guest into my office. If they want, they can chat with me and say, hey, I'm in the lobby. Come and get me. So we love our virtual receptionist.
Awesome. And can you customize your receptionist to provide instructions on how to use Walkabout?
You can provide anything you want. And one of my favorites is I mentioned Hitachi. And if I were to go and see my friend Mayu, this is pretty cool because what they've chosen to do is show their video about Hitachi. So you can put anything you'd like in here so that you are welcoming your guests into your custom lobby and your custom company.
That's awesome. All right. Well, those are all the questions for now. I'm sure other people have questions in the chat. So if you don't mind hopping over to the YouTube side and answering questions there, and then we will see you later.
Thank you.
Thanks so much. All right. So we are going to move on to our last pitch of the day, and that is going to be Austin. I do see that Austin is not connected to the camera. I'm going to stall for a second so he can get connected. But I hope you all are enjoying the pitches and learning something new about our accelerator companies that have just recently been accepted. And all right, I'm going to bring Austin up. I see that Austin's on camera. Hello.
Hey, how's it going?
Good. How are you? I do see myself
Very
in
good.
your screen. So if you don't mind switching over to the actual presentation.
You good now?
Yep. All right. You have 4 minutes. Take it away.
Perfect. Hi, I'm Austin. I want to slow the tempo for a second and ask you to think about your first visit to the doctor's office as a child. Now think about your last visit to the doctor's office. Where was that impression? At Exteo, we're focused on bridging that gap to experience. Now, I'm not talking about fish tanks and treasure boxes, but again, that experience. We have to connect you to your provider and more so your treatment options through interactive multimedia. Again, my name is Austin Podolsky, and I've had the pleasure of consulting thousands of plastic surgeons, dermatologists, and med spas to gain a true understanding of the medical practice as a business model. I've since recruited key executives from top equipment manufacturers within the space who've got proven track records and strategic exits, IPO, and mass distribution. Our first vertical is medical aesthetics. This is a subsector of healthcare that's valued at 50 billion with a CAGR of 8.9 afforded by 250,000 providers worldwide. This creates the opportunity for daily usage of our app in the nearing 20 million invasive and non-invasive procedures performed annually. These brick and mortars in the States are about 40,000. Of those 40,000 aesthetic service providers here in the US, we believe half are potential customers and have projected a 20% penetration rate over a 5-year period. Now, the industry problem is quite simple. Doctors are doctors and not marketers. You know, with an innovation pipeline like we have in aesthetics, providers have to remain relevant in this tech, focus on their certifications, and focus on procedure volume to make profit. While on the other hand, the product manufacturers are focused on multi-million-dollar direct-to-consumer ad campaigns. So what have we learned? Well, we can create results at all levels, esthetician to surgeon, and we can definitely get eyeballs and before COVID butts in seats, but there's literally nothing that we're doing in concert between the provider and the OEMs to create more upsell opportunity while a patient visits the office at the point of care. Exteo offers a cloud-based solution that provides the ability for us to control displays and interactions between these providers and these patients. We can broadcast relevant content to our closed network for OEMs while touting patient management through our iPad app for patients and providers. We can create advertorial or educational playlists and capture 2D and 3D photos documenting the patient journey. Adoption is initialized by leveraging my team's existing relationships with key opinion leaders in the space who will remain relevant and dominant on what tech is next and what tech is best. This paired with my past customer lists and my board of advisors' past customer lists, as well as a freemium model for newcomers, creates a stairway to subscription with a targeted $200 per month reoccurring revenue per user. So how'd we get here? Well, essentially we started as a manufacturing company, creating 3D full body scanning systems and pairing those with holograms. When we realized that manufacturing would slow our exit, we then explored IR sensors paired with iPad tablets to create immersive 3D images in seconds. We can now take those 3D images and cast those to any existing HDMI-enabled display or our holographic displays. Yes, I did mention holograms. We have a holographic kiosk that can be installed for a minimal cost and create a truly unique experience to allow for a patient, especially a patient who is a candidate for an aesthetic procedure, to see themselves in all lights in different ways at all different angles to help create the upsell of other treatments and offerings other than those that they initially booked for. In total, we've raised $1 million between our founders round, pre-seed, and current seed. We're out for another $250K to close the round. The primary use of funds is for SG&A and to pay our final deployment costs. Our app is ready to be launched into the Apple Store as soon as next month. We are in user application testing now, and we look forward to taking the market by storm and seeing how we can integrate into the Capital Factory network to see where we can take our tech next. Again, I'm Austin Podolsky, and I look forward to seeing you in the future.
Awesome. Oh, I'm going to try and, whoops, I don't know who I added up. Whoop, okay, there, took it down. All right, we are going to move on to your questions. So there are many use cases for this technology. What is the first use case you all plan to tackle, and what future applications do you plan to target?
Great question. So we've actually had the pleasure of interfacing with a few strategic partners pre-COVID. One was a equipment manufacturer that sells a facial device, and they were looking for a bolt-on tool to help boost post-sale support for their customers and create more engagement. Unfortunately, because of COVID, they did furlough about 90% of their sales staff, and so our plans with them haven't been derailed, but delayed. As far as use case goes, we have installed our holographic kiosks in many plastic surgery facilities, in the lobby, in the treatment rooms, and in the consult rooms. We also have a few physicians actually using our app to document the before and after process. And so our use cases continue to grow, but we're primarily focused again, towards that derm, towards that plastic, towards that med spa.
Okay, awesome, great answer. And then do you have plans to work with the government or DoD?
Absolutely. So that was a question that was brought to us when we kind of started our process with Capital Factory. It wasn't something that I had personally looked at before. I do have a competitor in the space that I believe has interfaced with Capital Factory and has recently got a government grant for their technology. It's been kind of rolled into more of a security and defense style contract. The technologies that we're using off the shelf and the way that we've bundled them could absolutely be applicable to many other industries, and certainly could fetch some federal grant funding, and we look forward to exploring that further as we kind of work for mentors, within Capital Factory to understand what those opportunities are. Right now, for me, my focus, blinders on, is prove out the model inside of aesthetics, but we are not opposed to looking at what we can do, to receive non-dilutable capital into the business.
Yeah, well, you are in the perfect place to explore all of those options. And we thank you for your pitch. And if anybody does have any questions, additional questions for Austin, we are going to be moving to Sococo for social hours. So you can ask them there if you do want to attend, Austin, but we do appreciate your pitch.
Thank you.
Alrighty, and that concludes our Founders Pitch presentation. Like I said earlier, we are hosting Sococo Social Happy Hour. I think everyone needs a little bit of a happy hour today in Sococo. And so for those of you that don't know what Sococo is, I'm going to very quickly share my screen so you can just get a feel for it. As you see here, we have the rooms. It's a virtual workspace, and we have everybody using it today. It looks like there's a bunch of people in it. And we have just a couple of rooms where you can go and meet other members. You can meet some staff if they attend, and just get to know the space, get to know Sococo, get to know us. So I highly encourage you attending. Me and Autumn Hankinson, the community operations coordinator at Capital Factory, will definitely be in attendance. Hopefully Autumn will be. I just kind of said she will. Sorry, Autumn. But we like to just talk and get to know our members a little bit better. There's no pressure. It's just, a casual social hour. So if you don't have your Sococo invite, please let me or Autumn know. We can add you to Sococo. But other than that, we have concluded the Founders Pitch presentations and Founder Stories. I really do appreciate you all attending today and spending some time with us. And we will see you next time. Bye, y'all.